What if instead of buying a console for a few $100s and a disc for each game, you could stream any game you like to any display you own, effortlessly and on demand? That's what cloud gaming provides to its users. It's a not-so-new way of letting users play video games by using remote servers and data centers. There's no need to download and install games on a PC or console or to even own a PC or a console. Instead, the streaming service requires a reliable internet connection to send gaming information to an app or browser installed on the recipient device, in most cases a TV or a weaker PC. The game is rendered, played, and saved on a remote server, but the user sees and interacts with everything locally on their device. It's just like Netflix or any other streaming platform, with the difference that the server where the video stream is coming from can also pick up and react to a user's inputs. That means users don't need a beefy RTX 40 series graphics card which goes for $1,200 and up, or a new Xbox Series X or PlayStation 5 for $500. With cloud gaming, all users need is a reliable internet connection and a controller of some sort. This opens a lot of possibilities. With any compatible hardware, you can stream a game from anywhere, access different game types, the last stage you stopped, easily share your screen, and so much more. All these are safely done online through a secure server that stores users' files. It functions by operating games through a virtual machine. While users are playing, a video stream is compressed to make it compatible with their device, then transmitted to the user either through a browser or a dedicated client app, while the server facilitates their inputs from a controller in almost real time. A user is essentially borrowing a small amount of computing horsepower from what is essentially a supercomputer. That makes cloud gaming exciting, but the tech hasn't fully matured quite yet. The evolution and revolution of cloud gaming has been a lengthy one. Back in 2000, a Finnish startup, G-Cluster, first demonstrated cloud gaming technology at E3, the largest trade event for the video game industry, with the aim of providing gaming services without the need to buy costly consoles. Following that, in 2005, Crytek, a German game developer, wanted to explore if Crysis, an incredibly popular first-person shooter they'd launched in 2007, could be played on the cloud. The research was stopped in 2007 due to economic studies that showed it was not feasible. First major cloud gaming service was OnLive, launched June 2010, but even then, it was a micro console with a special controller and later became browser supported like many of today's players. OnLive offered console games of that era which ran with a similar visual quality but did experience latency issues on quite a few occasions. After 5 years in operation, the business was closed and its assets sold to Sony. At a similar time, game developer David Perry, creator of Earthworm Jim and MDK, started Gaikai, a cloud gaming service allowing users to demo games before purchase, which Sony scooped up in 2012 for $380 million and incorporated into the PlayStation Network. This is the technology that allows PlayStation console owners to stream their installed games to other devices like the PlayStation Vita. It was also this acquisition that introduced the PlayStation Now, first game streaming service available from a console manufacturer that now boasts 3.5 million users paying $18 a month. In 2017, NVIDIA ramps up its graphic processing unit division aimed at the cloud gaming experience. This was the beginning of testing with actual users on what is today GeForce Now. In 2018, EA acquired GameFly Cloud Gaming Division with the aim of creating their own on-demand gaming technology. In the same year, Google and Microsoft partnered up to announce Project Stream, now Stadia, and Project xCloud, now Xbox game streaming service. Sure enough, both launched 1 year later, which is also when Facebook acquired PlayGiga, a Madrid-based cloud gaming startup, for $78 million and got into the cloud gaming space. In 2020, Facebook finally rolled out their own cloud gaming service incorporated in its social media platform and primarily oriented towards mobile users. That same year, Amazon launches Luna, and the public really starts taking cloud gaming seriously. There were many reasons why cloud gaming has had trouble succeeding over the past 20 years that have now been improved upon. Firstly, the average internet speed users need to stream cloud games in 720p resolution is around 15 megabits per second, while multiplayer gaming requires even more. Second, during the initial cloud gaming attempts, services had very few data centers to aid faster and wider transmission of data. For instance, a service provider with 1 or 2 data centers has very limited geographical locations they can serve, and also increases server latency users experience while playing a game, meaning their inputs are reflected in the game much slower. You won't be surprised to learn that today, cloud networks from Microsoft, Google, and Amazon have enabled global reach, allowing different cloud gaming platforms to rapidly deploy and expand to different regions. To that effect, these companies themselves have developed cloud gaming platforms. Their financial backing has enabled lower latency, higher frame rates, and a more convenient setup process. Services like Stadia and GeForce Now have the basic performance down, allowing them to push for more practical benefits of cloud gaming. For example, users don't need to worry about storage space. They never download anything outside of the streaming services application, avoiding 100 gigabyte downloads for the latest Call of Duty game. Similarly, users don't need to upgrade any components. Instead of spending $500 on a new console that can deliver 4K games at 60 frames per second, users can just buy the game and start playing right away. This dollar amount reduction and barrier for entry for live service games like Destiny 2 is one of the most important aspects of cloud gaming. To paint a more accurate picture, today the global online population is 5.1 billion people, out of which 3.2 billion are gamers of some sort, almost all of whom have the minimum required internet speed for cloud gaming. About 1 billion are aware of cloud gaming, with 725 million living where the service is available. Out of those, about 32 million are paying users. This is a 47% increase compared to 2021, when there was an estimated 21.5 million paying users. To put this in dollar terms, the market in 2022 amounted to $2.4 billion, an insane 75% higher than 2021's $1.4 billion estimate. Although these numbers sound very large, it's important to note that they aren't fully accurate. Many of these cloud services, such as Xbox Cloud Gaming and PlayStation Now, which account for the majority of paying users, are just add-ons for the Game Pass, which players need to pay for monthly to play online, unless it's a free-to-play game like Fortnite. Several players we spoke with admitted to never using the cloud gaming feature that was part of the bundle. These players highlighted concerns on input latency as the main reason for not making the switch to cloud. That perfectly ties up into what the main growth drivers of the cloud gaming industry are: larger bandwidths, lower latency, and ease of access to cloud-based games. Ease of access to cloud-based games comes down to the individual cloud gaming provider and how they decide to service the client, whether it be through a browser, a TV-based app, or something else. We are yet to see a complete TV-based app that only requires a subscription and purchase of a controller. This approach is likely to be the cheapest option for end users in the future. As for bandwidth sizes, according to internet speed specialist Ookla, the global average download speed on fixed broadband in September 21 was 113.25 megabytes on fixed broadband and 63.15 megabytes on mobile. These are both notable improvements over the scores of 85.73 megabytes broadband and 35.96 megabytes mobile, just 1 year earlier in September 2020. This trend isn't expected to stop anytime soon. This leads us to lower latency, which is in part a function of bandwidth strength, but also a function of the distance of data centers from the end user. This distance then comes down to the number of data centers as well. The more of them there are, the more they can be spread out, the better of a service they can deliver, resulting in lower latency all around. This need for data center infrastructure to enable cloud gaming is a fundamental difference to a model we are used to today, where the cost of endpoint delivery and play is largely borne by the end user by purchasing a suitable console or PC. In cloud gaming, though, it is down to the cloud gaming providers to build the infrastructure needed to play, and to top that off, the more their players then play, the more the providers pay. This breaks two of the three main monetization models of the gaming industry and sorely tests the third. It breaks both one-off paid-for games and subscription-based games because providers have a fixed income but a variable and, more importantly, open-ended cost. The free-to-play model fares better because it often aligns monetization with usage. In other words, the more time players spend in-game, the more likely they are to spend some money on a virtual hat or something. But free-to-plays have a different problem. They make a tiny amount per player hour, on average ranging between $0.08 to $0.12. This very low revenue per hour puts a hard ceiling on how much a cloud gaming provider can spend on their variable cost to serve and remain profitable. Putting aside this OpEx mountain providers need to climb to keep the service running, the second and much taller mountain to face is the CapEx one, to put the infrastructure in place and keep scaling it faster than the user base grows. As mentioned before, almost all cloud gaming platform solutions are currently based on proprietary implementations of something called pixel or frame streaming, often just generically video streaming. Platforms use highly specialized resources in the cloud equipped with GPUs that can render graphics and encode them into video in real time and send it back to the user, the player. Google Stadia, xCloud, NVIDIA GeForce Now, PlayStation Now, and Shadow are all built like this, and all own their own servers. None of this is a shared cloud resource that you can find on AWS, Azure, or Tencent. There are some shared GPU resources available, like for AWS AppStream, but the numbers are small and most of them are busy servicing CAD and other 3D productivity applications that also need GPUs as the volume of home working has rocketed. Let's do the numbers on how large this CapEx mountain actually is. We must start with the concept of an instance. It is a set of cloud resources required to provide service to one player for one game at a time. We refer to instances because increasingly it is not just one discrete physical machine on a blade in a rack, although plenty still are. The crucially important factor here is that one instance only serves one player. It is very different to other streaming services such as TV, where one server could be supporting thousands of users or requests. Any cloud gaming platform must have enough resource instances to satisfy peak concurrency demand. For gameplay, this is reliably between 7 and 10 p.m. at around 30% of DAU, daily active users. Meaning if there's 1 million DAU on a platform, it will need 300,000 instances, plus some change for new game launches or special holidays, to prevent users from incurring a server busy message, which would likely result in losing them as a paying user, right after flaming the provider on Reddit. In fact, there's an estimated 2.6 billion people playing some form of a game across all platforms at least once a month. Usually at this point, once the numbers sink in, people often think that's fine because Google and Amazon have loads of servers, and if they'll need more, they'll just build more. This isn't exactly fully accurate. They do have lots of generic compute servers and their growing capacity on multi-purpose AI compute servers. They also have lots of storage. They don't, however, have lots of GPU-equipped instances. Assuming this is ultimately how the cloud gaming future will get built out, someone will also have to pay for the infrastructure. As we all know, AWS, Azure, and Google do not operate on a build-it-and-they-will-come investment strategy. Now, one analyst from PR News estimated the annual recurring revenue potential of the market to be $56 billion by 2027. By his estimate, approximately 20% of the market would be gaming on the cloud, an estimated 600 million players. To operate at this scale without any server waiting times, there will need to be 150 to 200 million GPU-enabled resources on the cloud. Today, there are about 200,000. As Elon Musk would say, let that sink in. Our research has found that each data center-grade GPU-enabled set of resources that can support cloud gaming costs up to $2,000 all in once we've amortized the silicon, building, cooling, infrastructure, manpower, and truck rolls to install, before even switching it on. That means global infrastructure providers would have to invest $400 billion in infrastructure capex to get there. And then it'll need to get replaced every 3 to 5 years. To help you better visualize what these GPU-equipped instances look like, here's Xbox Cloud Gaming's component that features 8 Xbox consoles bundled into a single server rack. For those looking to start a cloud gaming business without spending billions on infrastructure, there are also services like Parsec, backed by Andreessen Horowitz and later sold to Unity for $320 million. Through their business model, a cloud gaming provider would avoid infrastructure setup costs and rent the infrastructure from the likes of AWS. A handy calculator on Parsec's site estimates the cost per user per month, along with storage and Parsec's fee, to amount to $11.19, with AWS fees accounting for $8.19 of that. In contrast, most cloud gaming providers charge up to $10 per month. Even for the infrastructure providers, the margins look very thin, and for those lacking infrastructure, at the current market price point, margins seem to be non-existent. Taking Amazon's Luna cloud gaming platform as an example, we can see in their financial statements a 25% operating margin on AWS, meaning they'd still incur a $6.14 maintenance cost per user per month, after spending billions of dollars on infrastructure. Amazon Luna currently charges users a $9.99 monthly fee. Due to these significant infrastructure investments, there are few providers of server hosting and remote computing: Amazon, Microsoft, Tencent, Alibaba, Google, and a few others. And unsurprisingly, all of these are attempting to set up their own cloud gaming platforms on the back of that infrastructure. Aside from these hosting providers, there is a wide list of other notable market participants: NVIDIA with their GeForce Now, Sony with PlayStation Now, Facebook Gaming, and many smaller players such as Shadow. This list does, however, narrow down once we look at the geographies these businesses serve, with some, like Luna, being present only in the US, while most cater North America and Europe, with little support for the rest of the world. China also has strong support from local players such as Ant, Tencent, and Alibaba. This is unsurprising, as the proximity of a data center is key to ensuring users experience as little latency as possible and maintain a smooth gaming experience. One other difference in how these platforms operate is the business model. We already mentioned some operate like a game library where users simply pick games and start playing. but there are some that operate as full-on cloud-based PCs that require users to install the necessary gaming software on that cloud machine in the first place. So far, the former has garnered more success. Taking a deeper look at the current competitive landscape, we realized market shares are somewhat of a mystery. We know Luna has approximately 250,000 users, Xbox Cloud 13 million users, and PS Now over 3.5 million users. But these figures are not to be trusted. Xbox Cloud comes as a bundle with the Xbox Game Pass that most players purchase to be able to play games online, and the same with PS Now. Questions remain about how many of their users actually make use of the cloud gaming feature. So what does all this mean for the future outlook of the cloud gaming industry? We've already mentioned the market size is estimated at $2.4 billion in 2022. Going forward, different sources vary drastically in their 2030 estimates. The figures range from $7.3 billion all the way up to $56 billion, and are largely dependent on expansion of number of new data centers, improvements in cloud computing, improvements in bandwidth, and a decrease in both infrastructure capex and opex. If Moore's law is to be trusted, we can expect to see the capex drop drastically in the coming years. For those that do not know, Gordon Moore, co-founder and former CEO of Intel, stated back in 1965 that every 2 years the number of transistors on a microchip will double, while the cost will be halved. That results in a 4x dollar-for-dollar improvement every 2 years. Will this be enough to propel the cloud gaming industry into the stratosphere? Casual Wolf of Wall Street reference. Only time will tell.